Hey, this is Danielle, and I'm the VP of Options at Simpler Trading. Welcome to today's episode of Earnings in Focus, Costco Edition. So, Costco is going to be reporting earnings tomorrow after the close, and Costco is one of my favorite tickers to buy and hold and also to trade, especially surrounding an earnings report. Let me tell you why. First of all, when you're looking at the longer term trend in Costco, you can see on the daily chart that there's quite a bit of consolidation. And so you might look at it and say, well, there's not really too much going on here. Why would I be interested in this ticker? Let me go ahead and show you the longer term trend. If you look at a monthly chart, especially, you can see that it has just this gorgeous upwards trend. You can see these nice green candles. You can see this pullback and this consolidation. And lo and behold, right here, this is what we call a monthly squeeze. Anytime there's a squeeze on any product, generally that's going to be that consolidation that's happening that's going to break out. A monthly squeeze is particularly exciting because that can create some massive moves. Generally, when the squeeze fires and that consolidation breaks out, you're going to see about 8 to 10 bars of price action. The last monthly squeeze that we had in Costco consolidated from March of 2016 all the way until December of 2017. And at that time, Costco was trading at about $177 a share. As you can see now, it's up at 558. And after that monthly squeeze fired, this thing traded from what, 177 until the squeeze lost momentum, which was up in here at about 237. So pretty decent price action. You can also see that there was another one here back in 2009 that had some pretty decent price action as well. But the reason why I like this one especially is because you have that squeeze, got a little cup and handle pattern there, and you have these overhead price targets up at 668, which let's call it 700 for a nice round number. So I have been buying and holding Costco, been adding into shares of that in my long-term account, especially earlier in the year, before it started breaking out. At this point, it is under a bit of resistance. You've got resistance there at the 568 price point. So keep in mind that it's already had kind of a big run here. But ultimately, I do think we're going to see it back up at 600, then 668. So longer term pattern is definitely there. But let's go ahead and talk about the earnings report that's coming up. So people are always confused when I say, hey, I'm bullish Costco and I'm buying the stock and, buying and holding this thing and I think it's great. Love to shop there. Nice dividends. I mean, you can see they also recently increased their dividend. Their dividend's $1.02 a share. Just 2 quarters ago, it was 90 cents a share. And just before that, it was 79 cents a share. Anytime you're seeing increased dividends like that, it's also another good signal that they're doing really well. But so anyways, as I was saying, bullish long term, but then I get to the earnings report and people say, well, why do you think it's going to trade lower on earnings when you're so bullish on the stock and you're buying it? And that's just because of the earnings patterns. So this is the earnings hot zone. You can see that on Costco, you have some trends here. Now, these bubbles are demonstrating the overnight gap that has occurred over earnings. As you can see over the course of the last 7 quarters, Costco's only gapped up one time. So, the last 6 quarters in a row, it's gapped down after reporting earnings. And you can see all these red bars. Those are going to be the pre earnings moves. The first one is going to be the 21 bar period before earnings. The second one's going to be the 8 bar period before earnings. The third one is going to be the 8 bar period after earnings. So they're color coded. It's red if the stock was down during that time frame, it's yellow if it was neutral, and it's green if it was up. So you can also see that over the course of, the last 5 quarters, it's been pretty bearish surrounding earnings. It's traded lower going into earnings. It's been neutral to bearish after earnings. Last quarter, we did actually have, positive move after earnings, but that's not very common for Costco. So when I'm looking at Costco and I'm saying, hey, I like the stock long term, but just beware that most of the time the stock will actually gap lower after the report. Now, that can be for a variety of reasons. What I've found with Costco and trading it over the years is just that it's just the way that the company functions. um, they work on getting deals for their members, right? And so they don't have like these huge profit margins. I don't know exactly what they are. Last I heard it was between 14 and 16%, and they have a very strict profit margin. So, it's not a tech company where you're just going to see these massive upside margins. They're pretty constant. The way that Costco will generally make more money is if they get more subscribers, more members, I guess they call them, or if they have those members that are buying more things. So that's generally where they see that upside. But Costco is like a pretty stable company. And so that's why, you'll see those longer term trends going higher. But then when it comes to earnings, it's like, oh, well, that was good. It was what is expected. Nothing too crazy up or down. So it tends to just fall a little bit. Um, that is why when I look at trading Costco over earnings, I never trade it to the upside. And I typically look at it as a potential opportunity to buy some more stock. In this example, probably not going to be buying stock just right up against this resistance zone, but I'll see what happens after the report. I think as long as it stays up above, 540, especially definitely 534. I think it'd be fine to add in some more shares. This is one that I like to dollar cost average, so it just kind of depends what the setup looks like. So what, you may ask, is the trade here then? Well, in the options market, I like to sell neutral premium, and this is a great one to do it on because as you can see, it just doesn't really move that much over earnings, but it has a situation in which the implied volatility is climbing higher. It's not a tech stock, the implied volatility is not crazy high, but it still goes up before earnings and it goes down after earnings. You can see what it did last quarter, quarter before that, quarter before that, quarter before that. I mean, it's just a volatility based pattern. Now, if you look at the overall expected move in this stock, they're pricing in a market maker move of $16.32. That's actually going to be an implied move of almost 3%, 2.9%. And if you look at the last, 7 quarters, you can see that it has not moved 3%. 0.2%, 2.2, 1.3, 1.7, 1.8, 2.5, 2%. The average gap down is going to be about negative 1.6. The average gap up is going to be about 1%. So if you look at Costco and you say, hey, was there anything crazy this quarter? I mean, I don't know if there was anything crazy this quarter. You never know. But I don't think there was. And, just from a pure probability standpoint, which is exactly what I'm looking at, I think that it makes sense to just sell the at the money premium. We have a market maker move that's bigger than the normal moves we see. We have a chart pattern where you can see that it's directly in the middle of support and resistance. So betting on Costco to trade higher and then trade lower and stay around this zone, I think makes a lot of sense. So that just brings us to the options chain where we can price out a trade. Now you might look at this and you say, "Oh, you're crazy. It has 41% implied volatility." Yeah, I mean, volatility is not that high, right? But it still goes up and comes down. So if you look at pricing it out, sticking with the at the money strikes. I'm not going to be doing this right now because the market's closed when I'm making this video. Also because I'm not going to do it until tomorrow, right before the close, because that's the best time where you can center your strikes. But looking at this kind of trade, I mean, really what you're trying to do is you're just trying to make 20% overnight, especially on Costco, low implied volatility. If you can get 20 and 25% in and out just with a 1% move, that's the goal. So if I set up this trade and say, all right, let's make it $20 wide. Let me sell the 560 calls and the 560 puts. I always want to have a risk defined spread. So I'm going to also buy protection. That would be buying the long 580 call and buying the long 540 put. That is going to give me a risk defined spread, also called an iron condor in Thinkorswim, otherwise known as an iron butterfly. Um, and that would give me a credit of $13.31. So essentially, if Costco stays within a $13 range, I can just buy back that premium the next day for profit. Now, what does the risk to reward parameters look like on this? In this instance, the max loss is going to be $669. How do you get that? Well, the spread is $20 wide on one side. You're getting a credit of $13. So the remaining distance in the spread there is going to be that $669 that you can lose. All right. Then what is the max profit? Well, the max profit is going to be the width of the spread minus what you already took in here. Um, so your max profit is going to be 1331. When you're looking at the max profit, I'm not ever aiming for the max profit. The only way you would get the max profit is if you sold this condor and you held it until Friday, 15 minutes before expiration, and Costco happened to be exactly at the 560 price. I'm not looking for, nor do I want the max profit. What I'm looking for is the risk to reward ratio because that's how you leverage your money. So if you're risking one to make two on a regular basis, what that means is that your, risk to reward is in your favor and you need to be right less often. When you're doing trades where you're risking three to make one, you have to have like a 90% win rate. I don't know exactly, but just saying you have to have a really high win rate because one trade can wipe out a lot of wins, right? So I like to set up my strategies where I'm risking one to make two, and then I'm targeting 20, 30% overnight. If it was a tech stock, you probably target a little bit more, but the implied volatility is a little bit lower. So I'm just going to target 20% in and out. So I'm going to set this up tomorrow. Another thing that I like to do is I like to place some good till cancel orders so I don't even have to get out in the morning. Essentially, then, when the trade occurs, Costco has earnings that comes out and trades higher, trades lower, then ideally I can just be taken out at market open um, after the ball crush comes through. So that's what I'm looking at doing with Costco. Inevitably there's always questions like, oh, but earnings is crazy. You never know what's going to happen. And yeah, of course, I mean, if I could predict it, I would be living on an island in Belize somewhere. And it's not that I'm trying to predict it, it's that I'm trying to look at the probabilities and say, hey, you know what? This is what's happened the last 7 quarters. This is what's being priced in. This is the trend with the implied volatility, and this is a trade setup that I like and that I'm going to use. Yes, there's going to be times where you're wrong. If it moves 3%, let's say there's some kind of calamity, what are you going to lose? You can never lose more than you initially risked when you got into the trade. So that's why your max loss is really important. There are times where I think like Tesla last quarter, that one got me because it gapped down and then it just kind of rolled over. So that will definitely happen, but there's also a lot of different tickers, like even Disney and Walmart. These two are pretty low volatility, but these ones worked out pretty well last quarter. So that is what I'm going to be doing with Costco. I'll be talking about it in the trading room tomorrow at Simpler Trading in the options gold room. And I'm also going to be talking about it a lot on Twitter. So make sure that you follow me on Twitter. And if you want to see any more videos, that is where you're going to be able to find them. I'll be posting them right here at Trader Danielle. And additionally, I'm going to be having a webinar on Thursday. So if you want to learn more about me and how I got into trading, check it out. You go to simplertrading.com/Danielle. You can sign up right here. It's going to be a free webinar. It's going to be on Thursday, the 28th at 7 o'clock Central. And I'm going to be covering, how to generate trades, how you know which tickers you want to look at, my favorite beginner-friendly trade setups, and the options trader's one job and how to nail it. So if you want to learn more, make sure you come and join me. Other than that, I hope you have a great rest of your day, and I will see you next time.
Hey traders, thanks for watching this video. If you want to make sure that you get all of our free trading content, make sure you hit subscribe and also give us a like and comment down below. If you want to learn more about us and if you want to join us for live trading in real markets with real money, make sure you go to simplertrading.com where you can join us for more info. Thank you very much and have a great day.